Xi Jinping is a great admirer of Mao Zedong. If you look at the history of Mao Zedong, it's not exactly, he wasn't exactly a benevolent dictator. And I think that they want to reform part of the economy, but they also want to clean up the system of some people that may not be friendly to them. And that may create some tensions in the political tensions. Well, basically, we will have next year a new Fed chairman, Janet Yellen, and she may decide as a Fed chairman, in order to gain some credibility, to kind of implement a cosmetic tapering. That would be, say, 10 billion a month or 20 billion a month. But in general, I think that over time, the asset purchases by the Fed will not be reduced, but actually increased. Well, I mean, it's very difficult to say whether we had asset bubbles here in Asia in terms of equities, because yes, since 2009, since the lows, equity prices in countries like Malaysia, Indonesia, the Philippines, Thailand, and even Singapore have risen significantly. But the economic prospects have also been quite favorable. And if I look at these economies, then I have to say that for most shares, the valuations are not that high compared to zero interest rates which you get in the banks. So say I can buy Malaysian shares or Singapore shares or Thai shares and have on my portfolio a dividend yield of, say, 5%. So compare that to government bonds in the US or to Singapore government bonds or cash in the bank, I think the valuations are not terribly stretched. I don't think they're cheap. I don't think these stocks will go up, but at least I get the 5% dividend. Well, I've been advising people to have an exposure to gold for the last 15 years or so. And the price of gold rose between 1999 and September 2011 very rapidly, from $255 to over $1,900. We're now slightly over $1,300. I think that the price of gold at this level is not terribly high compared to the wealth creation in the world, compared to the expansion of central banks' balance sheets, compared to the debt explosion, and so forth and so on. So yeah, I continue to recommend people that they allocate some of their money to gold. I prefer physical gold, but I have to say that numerous gold mining shares are now very inexpensive compared, A, to the overall S&P, B, compared to the price of gold. In other words, the share market will always have a fluctuation above on the upside and below on the downside. So like a property stock will go up more than the property price, and when the property market goes down, property stocks drop more than the market. Same for gold shares, they go up and down more than the gold price.